Hello and welcome to 3.0 TV. I am Ruchi Sharma.
And I am Vishakha Thakur. So we have got all the major global crypto news from the past week for you in the show. But before we start, let's cut across to Manoj Thara for the market check.
So cryptocurrency market surged more than 5% on Friday, with Ethereum spearheading the broader rally across the digital assets. So this week's gains marked the strongest performance since 2021, fueled by the easing global trade tensions and renewed optimism around the blockchain innovation. That's what the market analysts have said. Ethereum, the second largest crypto by market cap, soared as much as 21% on Friday to reach the levels at $2,490. The token has surged nearly 33% over the week, its steepest advance since the speculative boom of 2021. That's what analysts have highlighted, and that is driven by the low interest rates and the pandemic era exuberance. Bitcoin, the benchmark of the digital assets, climbed 2% to the high of $1,03,400, and the rally followed news of the new trade pact between the US and the UK, signaling improving global economic relations and a potential reversal of the Trump escalations, the tariff escalation seen during the Trump administration.
Thanks, Manoj. New Hampshire has become the first US state to allow its treasury to invest in crypto assets after Governor Kelly Ayotte signed House Bill 302 into law on May 6th.
Well, the law takes effect in 60 days, effectively allowing the state to begin accumulating Bitcoin.
HB 302 was introduced in January. It authorizes a New Hampshire state treasurer to purchase Bitcoin and other digital assets with market caps above $500 billion.
However, only Bitcoin currently qualifies as the next largest. Ethereum has just a $220 billion market cap. Holdings are capped at 5% of total state funds to maintain a balanced investment strategy, and all assets must be kept in US regulated custody through state-controlled multi-signature wallets, qualified custodians, or exchange-traded products.
Moving on, Arizona Governor Katie Hobbs has signed a bill into law allowing the US state to keep unclaimed crypto and establish a Bitcoin reserve fund that won't use any taxpayer money or state funds.
Right, and Hobbs also signed House Bill 2749 into law on May 7, which allows Arizona to claim ownership of abandoned digital assets if the owner fails to respond to communications within 3 years.
The state's custodians can stake the crypto to earn rewards or receive airdrops, which can then be deposited into what Arizona has called a Bitcoin and Digital Asset Reserve Fund.
Moving on, according to recent Bernstein Research, corporations could invest up to $330 billion in Bitcoin over the next 5 years.
This potential shift suggests Bitcoin is evolving from a speculative asset to a legitimate corporate treasury option. They added that over the next 5 years, we expect listed corporates to allocate around $205 billion in capital for Bitcoin acquisition.
Yes, and this will be led by small, low-growth companies trying to emulate Strategy's Bitcoin treasury model, they added.
Researchers at the wealth management giant predicted that companies with $100 million or more in cash reserves could contribute $190 billion to BTC allocations.
So high-growth smaller firms might add $11 billion by 2026, and even conservative estimates suggest $5 billion could come from 10 large firms by 2027.
Well, the researchers made most of their predictions by comparing them to Michael Saylor's strategy model, which has been a huge success.
Right. Moving on, co-founder and former CEO Michael Saylor announced the latest Bitcoin acquisition made by the corporate giant Strategy. The company has spent over $180 million to purchase 1,895 Bitcoin, bringing its total to well over 555,000 Bitcoin.
Well, its total stash has surged to 555,450 BTC, bought at an average price of $68,550 per Bitcoin. This means that the firm has spent $38.08 billion to acquire it, and its unrealized profit is currently north of $16 billion as BTC stands above $102,000.
Moving on, Metaplanet purchased additional 555 Bitcoins after raising $25 million by issuing zero coupon bonds on May 7, 2025. Now, these bonds were sold to EVO Fund and come with no interest. The money raised was fully used to buy more Bitcoin.
This latest acquisition cost approximately $53.4 million at an average price of $96,134 per Bitcoin. Year to date, Metaplanet has achieved a BTC yield of 136.7%, showcasing the effectiveness of its capital deployment strategy.
And as of May 7, the company holds a total of 5,555 Bitcoin, acquired for around $481.5 million at an average cost basis of $86,672 per Bitcoin.
Meanwhile, Tokyo-based Metaplanet has raised additional $21.25 million by issuing zero-interest bonds to grow its Bitcoin reserves. The company is making a strong move in the crypto space, choosing a cost-effective way to invest more in Bitcoin.
Right. Moving on, Crypto.com is growing its US presence with a new regional office in Washington, D.C.
This development comes as 21 Shares has introduced a new exchange-traded product that gives investors regulated access to Crypto.com supported blockchain Kronos.
And according to a May 7 press release, the new office will be located in downtown DC, close to the White House. The DC desk will mainly focus on handling public and government-related matters for the company's operations in the country.
Well, this marks Crypto.com's latest expansion in North America, following the opening of its regional headquarters in Tyler, Texas in 2024.
Moving on, Ethereum was up 18% today, going past the $2,200 mark after the much anticipated Spectre upgrade.
Well, this sharp surge followed new risk-on sentiment in the market as investors piled into the purchase of Ether. The 18% jump is the biggest single-day gain for Ether since May 2021.
So the upgrade that became live on Tuesday is Ethereum's biggest update since the 2022 merge, and it has code changes that improve staking efficiency, validator operations, and scalability for Layer 2 solutions, thus further increasing the appeal of Ether.
Well, moving on, the largest US-based crypto exchange has entered into an agreement to acquire the biggest digital asset options trading platform. The statement by Coinbase informed that the overall value of the transaction will be approximately $2.9 billion, comprising of cash and company shares.
So the Wall Street listed company described the move as a milestone transaction, as Deribit is the global leader in terms of crypto options with a current open interest of roughly $30 billion.
Well, according to the statement, this acquisition will highlight Coinbase's derivative business, establishing Coinbase as the premier global platform for crypto derivatives.
Right, and the $700 million out of the $2.9 billion total will be paid in cash, while the remaining will be in the form of 11 million shares of Coinbase Class A common stock.
Although the transaction is subject to regulatory approval by US watchdogs, Coinbase's stock price is soared in pre-market trading by almost 5% to over $200.
So that's all in this episode of the Weekly Wrap. This is me, Vishakha Thakur, signing off.
And this is me, Ruchi Sharma, signing off. Do like, share, and subscribe to 3 TV. And for more information and stories, log on to our website www.3verstv.io or scan the QR code. Have a great weekend.